Talking about earnings, another big day out of China. Let's cross over to Bloomberg's Stephen Angle in Beijing with the numbers. Steve?
Yeah, that's right. Let's begin with CNOOC, China's biggest offshore energy explorer, Linda. Profit falling 55% to the equivalent of $1.8 billion in the first half. But that did beat analysts' expectations, or the estimates from analysts that we've surveyed. A rebound in oil prices helping CNOOC, as did China's economic recovery, which boosted demand for fuels. Crude oil has more than doubled from its February low, but prices still averaging about 53% less in the first half than a year earlier. CNOOC says it wants to cooperate with other companies rather than make acquisitions, and denies reports it will buy the Argentinian unit of Spain's Repsol.
I will say that we have no intentions of doing so. This is only market speculation. We are not in talks to buy or cooperate with Repsol's unit.
Well, CNOOC's ADRs in New York rose overnight. They are not traded in Shanghai. They are in Hong Kong, opening up in about 15 minutes. Stock code 883. Chinese stocks overnight in New York was otherwise a down day for most of those Chinese commodity stocks. Analyst Wang Ao-Chao of UOB Kay Hian in Shanghai calls CNOOC's report very positive results given the low level of oil prices at the start of the year. Not so for Wuhan Iron and Steel. Its ADR is plummeting 10% overnight after reporting first-half profit plunged 90%. China's steel industry posting 7 straight months of losses starting last October as the global recession slashed exports and domestic sales. Industry profit is expected, though, to rebound in this current second half as stimulus measures revive demand. But we are hearing talk that the government is already considering curbs on overcapacity in industries, including steel, to rein in overinvestment. Profit in the first half slipped to the equivalent of $74 million. Benchmark Chinese hot-rolled prices have gained about 20% since the government announced those stimulus measures back in last November. And rival Onggong Steel last week forecast it will post a third-quarter profit after a loss in the first half. So some positive signs. Wuhan also plans to raise 12 billion yuan, $1.8 billion US, in a rights issue, with proceeds going to be used on acquisitions. Checking the shares right now in the opening minutes of trade in Shanghai. The Shanghai comp down 1/3%. Wuhan, though, up about 2.5% in the opening going. SAIC down 1%. The reason I make mention of that is a big reason. Another big user of steel is the biggest automaker, SAIC Motor, which partners with GM and Volkswagen. It reported a 26% drop in first-half profit. Back over to you.
Stephen Angle, thank you so much for that.